Hello everyone, welcome to Oliveboard. I hope you all are good and your paper was good. So, this is a session when we'll be discussing what kind of questions were asked. We'll be having a detailed analysis of the questions that were asked in CAIIB ABM exam. So, I hope you all are ready to begin. So, this session is going to be beneficial for all those who have appeared for the exam and who were not able to clear it in the first attempt or this attempt, whatever the attempt was, or for those people who are about to appear for it in the May June session. So, it is going to be very beneficial for you to understand that what kind of questions are actually asked, what is the current trend. Like this time we observed a change in trend. What was that? It was about uh, as earlier perception was that mostly the questions were from the module B, but here some different thing was noticed. Here we saw variation. The variation was that mostly the questions were from module C, and even more than expected. More than expected questions came from the human resource module, the HRM module. So, we need to be prepared for all sort of exam, whatever the combination they can set up and everything. So, for those who are yet to appear for the May June session, this is an extremely important video for you. So do not skip it and please watch the video till end. If you like the session, please press the like button so that we can know that you are enjoying these sessions and we can come up with more such sessions for you. And if you are new to this channel, don't forget to subscribe the channel and press the bell icon so that you do not miss any important update from Oliveboard. So we are on a daily basis coming up with the sessions that are having various questions that are important for your JAIIB as well as the CAIIB exam. So to stay updated, please press the bell icon. Alright, so now we'll be starting the discussion on the paper. So let's see what all type of questions were asked. So first of all, there was a question that was based on the 360-degree appraisal method. So what is this 360-degree appraisal method? So it is the method, see basically I'll just give you a very simple human example, the real life example of this. Let's say I've written a story. So I have written a story and I just went to my friend named A. So I asked her to read it. She said that she hasn't liked it that much. So I was disheartened that I wrote it with all my heart, why it wasn't good enough for her to like. So I went to another friend, and the name of this other friend is B. So B read it and B told me that she loved my story. How in depth, how she was very impressed with the things that I have focused upon, the things that I have expressed explicitly. So she found it really very interesting. She found it very expressive. So, with the little details that were there in the story, she loved it. So, she told me that it was really good. So, I was confused. Then I went to another friend. I went to this person C. So, this person C, she told me that, okay, your story actually it's very good. So, since my English is good, it was easier for me to understand these terms. But for those people who are not having that good vocabulary, they would find it difficult to understand these terms. So, your story was very good, but you should focus more upon making it more understandable for everyone so that it can be a reading material for a general audience. You should not just focus upon those people who are having a very good vocabulary. Instead, in order to let it reach more audience, you should focus on making it simpler. So, this is what person C advised. So, in all, I got the summary of my performance. What I got from all these point of views was, although my story is good, I was doing everything good, but I need to work more upon making it more simple in order for everyone to understand it. Okay, so what is this? I'm taking the advice, I'm taking the views of various people, what we can call it. So, in if you think about it, you can say that I'm taking advice from a variety of people, a variety of perspectives I'm taking into account. That is very beneficial, and that is what 360-degree appraisal mechanism. Okay, so what happened in the real terms, if we talk about in offices, in the human resource management, what happens is the appraisal, when they are using this 360-degree appraisal method, what they do, they take the advice from they actually take the 360-degree appraisal. That means there will be superiors appraisal. Okay, then what else? So there will be subordinates, the ones who are junior to you, their appraisal as well will be there. Okay, so that will be there. What else? So there will be the peer appraisal, your people who are working with you, peers appraisal. What else? So it will have the self appraisal as well. Okay, so in this way you can get a broader perspective, you can just come to a better conclusion. Okay, so that is the reason why this method is used. So a question about 360-degree appraisal was asked. Then what was the next thing that was asked? So the next thing was regarding the debtors turnover ratio. So we have discussed about debtors turnover ratio in much detail in the JAIIB as well as the CAIIB. When we discuss in CAIIB, we have seen it in the module D, and in JAIIB we have seen in the module C of your accounting and finance for bankers. So what exactly is this debtors turnover ratio? So how do you find it? So the formula to find the debtors turnover ratio, I'll write it here. So this debtors turnover ratio is what? Net credit sale divided by the average account receivable. All right. So what do we understand by this ratio? Why is this ratio used? So the purpose of this ratio is to find out, see, all of the businesses, they give some things on credit. Okay, so everyone does not buy everything on cash. Every sale is not a cash sale. So they offer few things in credit. So whenever they are giving something on credit, they want to make sure, and we need to check whether the ones to whom you are giving something on credit, how efficient your recovery mechanism is. So how efficiently you can convert those credit sales into cash. Okay, so how the liquidity, how good you are in making it, you can say, convert it into the this cash. So that is what is told by this ratio. Now what should be the ratio? See, if this debtors turnover ratio is there, and if this ratio is, let's say, very high, so that means that company's collection of accounts receivable is efficient, and the company has a high proportion of quality customers that pay the debt quickly. So the number of defaulters is less basically. So that is what is told by this debtors turnover ratio. So about this one question was there. I hope you all have solved it correctly. Then the next one was regarding factoring. So what was this? So we have talked about the factoring in the JIIB as well. So what is this? So let's say I'm my name is person A and I'm selling something to, let's say, person B. But person B is saying that I don't have cash currently, so I'll be paying you after 3 months. Okay, Now, let's say in between, during this time, there was an urgent requirement of funds, and I was in a need of getting funds urgently. Now, since I've already committed that, okay, you pay me after 3 months, I cannot go to this person B. Okay, so I will be going to another party, that is C, and I will be asking them to take this bill and take the invoice, and what you do, you just give me that fund for now. So the person C will say, why would I do that? What's my what will I get with this? What is with this deal, what am I going to get? So you will say that, okay, so the total receivable was 10,000, so instead of 10,000 you just give me 9,000, and rest of the 1,000 is your fees. Okay, so whatever commission you can take. Okay, so that is the charge that you're taking for providing me liquidity for now. So now this deal is of advantage to this person C as well, and A definitely wanted funds. So in this way, all three parties are not getting, you can say, the needs of all three parties are getting satisfied, and that is what is about this factoring. This is what we call as factoring. So this was the next question. Now let's see the next one. So there was a question on takeout financing. Before we move forward, I want to tell you all that if you have appeared for this exam, so I would really recommend you, and I will really request you to write down the answers in the comment section, and you can write down the questions that you can remember from the particular shift. So I have consolidated all the questions that I can get. So instead of doing the shift wise analysis, I thought of including all the things that were there in all of the shifts. So I have included comprehensively everything, so that it should be beneficial for the next people who are going to attempt it in May or June. Okay, so you can add on more questions in the comment section, and if there is any question that you were not able to find out the answer, you can let me know, and I'll make sure to answer all your queries in the comment. So all right, now let's move back. So there was a question regarding the takeout financing. So what is this takeout financing? We have discussed in the lectures that it is basically a method of financing. Which kind of method? Where a loan that is procured later is used to replace the initial loan. So what exactly is happening here is, let's say if there is a very long term project, okay, but the bank is offering some medium term loans only. So bank is offering the loan for, let's say, 5 to 7 years, and you have some project which will require financing for 15 you want the payback period for 15 years. So after taking out the loan from the bank, the institution could offload them to another bank or to keep it. Okay, so these are the options. So what is happening? I want financing for 15 years. Bank is offering me loan just for 5 to 7 years. So I would take the loan for now. Later on, I will just you can say what I'll do after that. So I'm going to offload it to another bank. So that is how I'm going to deal with it in order to get the long term finance. Okay, so that is about this one. I hope that you got the idea of it, and I hope that you all have marked it correctly. And for the ones who are yet to appear for the exam, you can just have a look at what exactly is the takeout financing. It's an important concept. Okay, and the debtor turnover ratio as well, I would really like to tell you that it is one of the most important questions. The ratio analysis is always important for you, be it CAIIB, be it JAIIB. Ratio analysis question is a must if you talk about the accounting and finance for bankers, or even the this ABM exam of your CAIIB. For both, it is extremely important, so do not miss out. All right, so now let's see. So what is it? This takeout financing, what is it? It is a type of long term financing that is replacing the short term interim financing. Okay, so this is how we do it. Okay, now let's move on to the next question. So there were two questions that were there on the slack variable. So before that, there is something else as well, so let's have a look at that. All right, so there was a question that was related to the credit audit that happens in the institutions. So this credit audit, we have discussed on it in the lectures. So basically, it is there to examine the compliance with the extent sanction and the post sanction process that are laid down by the bank on time to time. So if let's say they have given me a loan and it's of 40 lakh home loan is there, and I'm just you can say I am building a house that is requiring just 20 lakhs. So if proper monitoring is not there, it is possible that I may use that 20 lakh, the rest of the 20 lakh, in some consumption purpose, and that is wrong. Why is it wrong? It is not going to create any asset for the bank. Okay, so that is the thing. Now, what are the audits that are there? So we have the external audit, internal revenue service audit. All these audits are there. So the main audits are the external audit and the internal audit that are there. Okay, so I hope that you have answered this question regarding the this credit because this was from the module D. And which part? So when we discuss the credit monitoring and credit control, so in that we have talked about this and the credit audit that is there. Okay, so all right, it should be an easy one. It should not be the question that you can miss out on. Okay, it's from the sixth chapter, I believe, of your this module D. So credit monitoring and credit control chapter. Okay, all right. Now let's see what is the next question. So the next question, there was a question based on this slack variable. So that was a numerical question. Since we do not have the exact question with us, the numerical figures, so we cannot discuss this question here. But this was from your module B of this ABM. Okay, so slack variable, we are aware that it is a see, if it was a numerical, the figures were given, it would be much easier for us to talk about it. But since we do not have it, so it is going to be difficult in order to, or if we take some random figures, that also will be wrong, because that would create unnecessary confusion. Okay, so all right, now so it's basically what, it's a part of linear programming chapter. Okay, or what we do here is, in the case of slack variable, what we do, so if any constraint is there and that is having a sign that is less than, something positive has to be added to the left side to make it equal. Or and then what else is there? So the positive variable that we add, that is the one that is called as the slack variable. So you had to calculate the slack variable in this question. So for that, I would be requiring the question. So if you remember what was the exact figure, you can comment it, and I will be solving it for you. All right, now let's move on to the next one. So the next one was from a very interesting concept that is there. So that was about the laissez-faire economics. So what is it? What exactly is it? So see, it is basically derived from a French word. And what this laissez-faire means, it means that allowed to do something. Okay, so what exactly is this laissez-faire economy? So I'll just tell you in simple terms so that you don't get confused. So it's there in your module A. So I'm sure that you all have heard of this and you all have studied about this laissez-faire economy. It is basically an extreme case of market economy. Okay, so the extreme case of market economy. All right, so this is what this laissez-faire economy is. All right. So, what else do we know about this? So, there is a minimal, or you can say the minimum interference is there from the government in the economic affairs, and everything is given, the more power is given to whom? It is given to the market. So, government intervention is very less. Okay. So that is the one. So this in this case, why I said that the French word is this French word means allowed to do. So this policy, actually the government is allowing to do whatever they are doing, the market. So minimal government interference is there in the economic affairs of the individuals and the society. Okay, so this is what happens in the case of laissez-faire economy. Okay, so there is a proper respect for the private property, and there is a freedom to start and own a business, and free market trade is there. Okay, so no government pricing is there, no control is there, no excessive intervention from the government is there. That is how it works. Okay, all right, so I hope you all have answered it correctly. Now let's move to the next page. So the next question was regarding the career anchor. So basically it was a question where what they did was, it was fill in the blank type of question. So what they did was, they actually wrote a definition of career anchor, and they just left the this career anchor term blank. So you have to tell that which of the following is true. So basically the purpose was to see that whether you are aware of the definition of career anchor or not. So what exactly is it? So career anchor is a combination of perceived area of competence, motive, and the value relating to professional work choices. Okay, so that is what exactly it is. Now see, you can think of this, it is as a motivator that make the employees held on their jobs. Okay, so that is what this career anchor is. All right, so yeah, the question, the exact statement, that was just the definition written, and you have to tell that which of the following is correct. So what is career anchor? So self perception of talent and abilities that is based on one's performance. If I know that I'm good at something, so I'm going to make the decisions for myself based on my abilities, based on my talent. Self perceived motives and needs based on self diagnosis and feedback. So here the importance of self is very much. Here I am driving my success, here I am driving my career. Okay, then another thing that is there is the self perceived attitude and the value based on interactions and the norms and the values implicit in the organization. So these things are there, that are the main, you can say, characteristics of career anchor. So I hope you all have answered it correctly. If you have gone through the module C, so we have seen a very big, you can say, a lot of questions were there from module C. So people who were neglecting it because it was a theoretical module, so they must not take it lightly, because this module actually accounted for a lot of questions, and it actually helped a lot of aspirants to pass the exam. So do not take it lightly at all. Okay, all right, then the next one, it's a very interesting area. So the next question was about the current ratio. So this is an extremely important thing, I must say. Even if you are appearing for JAIIB or CAIIB, the ratio analysis is one of the most important things. Okay, so what exactly is this current ratio? Current ratio is one of the liquidity ratios that are there. So it just tells the ability of any company to pay its short term obligations. So whatever obligations are due within 1 year, that is measured, that how what is your capability to pay off those debts, or let's say the obligations within 1 year. So how we calculate this current ratio? So it is calculated by current asset divided by current liability. Okay, So now current asset, we are aware what we count as the current asset, the liquid assets, okay, liquid ones. But here you are going to include the inventory as well. Okay, so it includes the inventory as well. Now, current liabilities that are payable within 1 year. All right. Now let's see. So I hope that it was a simple one. You just have to put the values in the formula, right? You should be aware that what you have to consider as a current asset or what you have to consider as a current liability. That's all that is required for you to solve the current ratio problems. Then the next one was the quick ratio numerical. So this is also one of the very you can say most expected thing. Okay, so quick ratio, what is this? Quick ratio is basically nothing but just like this current ratio, but you have to subtract. So you just write current asset minus inventory or stock, whatever is there, okay, divided by current liability. So liability side is going to remain same, but here you just have to subtract the inventory from this in order to come up with the quick ratio. So what we say in the case of current ratio is it should be ideally 2:1. That means if your liabilities, the current liabilities are proportional to 1, so in that case the asset that you are having, the current asset should be twice the current liabilities. Okay, so that is the case with this current ratio. So the ideal current ratio is 2:1, but in the case of quick ratio, what happens is quick ratio, you can just have the ideal quick ratio is 1:1. Why is it so? Because you are just taking the liquid asset. So this this quick ratio is also called as asset test ratio. Asset test ratio. What else? It is also called as the liquidity ratio. Okay, so here the actual liquidity, because see, if you are having something in inventory, so it is not always, you cannot say that you can immediately sell it. Okay, so that is not as liquid as the other assets that we are talking about, the other current assets. So you have to subtract the inventory from the current asset in order to come up with the quick ratio. Okay, and then liability side remains the same. Nothing is different in the case of liability side. Okay, so one question was from this part, so I'm sure you will be able to answer it correctly. One more thing, why do we want that it shouldn't be very high? So the reason is, if you are having too much of current asset, if you are having too much of let's say liquidity, and the current liability is less, that means definitely you are not utilizing your funds properly. So you have the chance of utilizing your funds properly, but you are just keeping lakhs of rupees in your drawer. So that much liquidity is also not good, because we are aware of the time value of money concept. We are aware that the money that you are having is having a earning potential. So you can invest it somewhere and you can get some income from that. So if you are just keeping those funds, that is actually not a very good thing. So these ratios should not be very high. All right, now let's see, and it should not even be very low. Why now? Why is it so? The reason is very obvious. If let's say my current liabilities are 20,000 and I'm having just 10,000 as liquidity, so in that case I won't be able to repay my debts, my obligations, my short-term obligations, because of the fact that I'm not having a sufficient liquidity. So that is a negative thing for any business. So that is why we want it to be optimal. And what is this number? So for this current ratio, it should be 2:1. For quick ratio, it should be 1:1. Okay, I hope you all are clear with this concept. Now the next one is the debt to equity ratio. This was also a question. What was this? See, we are aware that debt to equity ratio, this D ratio, it tells us how much our organization is dependent on the outside funds. Okay, so how do we calculate it? We calculate it by taking the total liabilities. See, in this basically what we have to do is we have to see what is the financing source. Okay, so we have to take the external debt, divide it with what? Divide it by the shareholders' equity. And that is how we come up with the debt to equity ratio. That tells that how much you are dependent on outside funds and how much your own shareholders have invested in the company. Okay, so the relative contribution of the creditors and the shareholders or the owners who are there of the company, that is in the total capital that is employed in the business, that is calculated by the debt to equity ratio. Okay, so if you are too much dependent on the debts, that means that there are high chances that your company is not going to be able to repay its debt in future, possible, because you are too much dependent on the outside funding, and you're not having sufficient investment from the investors or the shareholders. Okay, so it should not be too high. All right, now let's move to the next set of questions that were there. So this is a long term ratio. You all must know this, that this is a long term ratio. Now let's see what is next. So there was a question that was there on the Compa ratio. Okay, so this question was there, and so from where this question was asked, this was basically from HRM module, that means the module C. Okay, HRM module. So it was there. So this is basically a comparison ratio, that this Compa ratio that is there. It is basically what it tells us is here. I'll write it. So the purpose is to check whether you are paying your employees sufficiently good or not. That means if, let's say, you are I'm just taking a very rough number. So if you are paying, let's say, 100 rupees for something, this is actually a very you can say just an example, just to tell you, just to simplify the things. So if you are paying someone 100 rupees for some task, and you are aware that in market people are paying 250, 300, 500 for the same task, that means you are not paying your employees sufficient. Okay, so if you are paying, this is not an appropriate pay, right? So that will lead to definitely the dissatisfaction of the employees, plus this is a exploitation, so this should not happen. So this basically measures the current pay rates as the percentage of the range midpoints. Okay, so there are certain midpoints that are decided, that are you can say found out by the market pay, and it is going to be compared with the employee's actual salary. And if you are getting paid below those rates, so there needs to be some corrections that need to be done. So that is the purpose of this Compa ratio. Okay, so there was a question on the Compa ratio. I hope that you all have solved it correctly, and since we are not having the complete question, so we cannot tell you the right answer to that question. But what we do, what is the formula, that I can write it for you. So this Compa ratio, CR, is what? Actual salary, that is AS, actual salary of the employees. Okay, that divided by what? That you have to divide by the MP, that means the midpoint of the pay range, and you have to multiply it with 100. So that is how you find out the Compa rate. Okay, Compa ratio. So it is a comparative ratio to find out whether you are paying the employees appropriately. So this denominator, depending on what kind of things were given in the question, so it is basically the reference point of the pay, whatever you're taking. So that is how we calculate it. So if you remember what was exact figures, you can write it down in the comment section, and I will tell you the detailed solution to that. All right, now let's move to the next one. So the next question was about the methods of the performance appraisal. Okay, so the traditional methods and the modern method of the performance appraisal was asked. So the question was about the traditional and the modern methods of the performance appraisal. So we are aware that earlier what kind of methods were used. The traditional methods were including that were just based on the personalities or the personal qualities like the knowledge, capacity, judgment, initiative, attitude, loyalty, leadership, judgment, these things. Okay. Now there were certain methods. What were the methods? So like the unstructured method of appraisal, then there was the straight ranking method of appraisal, then paired comparison method of appraisal. There were so many methods. Man to man comparison method was there, then grading method was there, then graphic rating scale was there, and then we had the forced choice method. After that there were so many other things like the checklist. So there were so many like the weighted checklist was there and everything like this. But there was a drawback of this traditional method. So what was the drawback? These methods basically suffered from the halo effect. So halo effect is what? When you are let's say following any of these methods, so there is a error committed when let's say I'm talking about any strong personality trait. So if there is an error in that, so it is going to affect the whole evaluation that is there. So that is the halo effect tendency. So the evaluator assigns the same rating to all aspects irrespective of the employee's performance. So this defect gets detected at a factor stage, and the halo effect can be minimized if the evaluator judges the performance of all the employees on one aspect and then all employees on the second aspect also, and so on. Okay, so based on this, halo effect is actually a really very important concept. So that is asked every time in every exam. It is asked definitely. So you can just have a look at it. It is going to be really very important for your exam as well. Okay, so now let's see what was the next one. So 360-degree appraisal we have already discussed on this. I believe it might be there in more than one shift, so that is why it is included here. Then the next question was about the components of this MCLR. Okay, so this MCLR components that are there, I'll just write it down for you so that you can just get an idea. It is also an important thing to know because we use this term so much. So you should be aware that on basis of what components it is calculated by the bank. So it is first of all the marginal cost is there, marginal cost of funds. What else? So the next one is cash reserve ratio, that means CRR. What is next? So the tenure premium. And what was next? So the next is the operating cost. Alright, so I hope you all have answered it correctly. If not, no problem. Just make a note of it that what are the important components. These are the only major components that are there in the calculation of MCLR. What is MCLR? Marginal cost of funds based lending rate. So see, this is the minimum interest rate below which any financial institution cannot lend. There are certain exceptions definitely, but in general cases it should not. Okay, so this is very important thing for you to know. Now let's move on to the next one. So the methods used by the cyclic variation, this was the next question. So the right answer to that question is the residual method. Okay, so I hope you all have answered it correctly. If you are facing any difficulty or any other thing that is there, you can write it down in the comment section. Okay, so let's move on to the next one. What was there? So the next question was on the career path, career path planning. Another one from HRM. Okay, so do not neglect this module. That is a very important one, the module C. Actually, all the modules, I always recommend all the aspirants not to miss out on any module. You should not skip any module. See, I have seen people telling their students that, or the aspirants who are appearing for the exam, that module C is very bulky. You should not read it. It's just generic things are there. But it is not the case. Nowadays, see, human resource is one of the very important aspect of any organization, right? So human resource management is extremely important, and nowadays exams are also focused on that part. Plus, every module is having its own importance, and that is the reason why it has been included in your syllabus. So you should not skip any module at all. Okay, all right. After that, there was a question on the trade theory, and then the question was there in the ERG theory. Okay, so these were the questions. I believe these theories are extremely important, so you should and you must cover it. All right, so what is this? This is basically, see, I'll just tell you some of the things about it. So what it tells is there are basically three, you can say three group of the core needs. One is existence, then the second is relatedness, and the third is the growth. So that is why ERG is there. This is the full form that is there. Okay, so it is a very important theory and you must read it. It is always important aspect whenever you are appearing for the CAIIB exam. All right, now let's see what is next. So let's see, the next one is a theory based question were there based on the IS and LM curve. Okay, so it is very important concept from your module A. So what is this ISLM? IS is basically this IS stands for the investment saving, and the LM stands for what? Liquidity preference, money supply. Okay, so this is what it is. So it is basically a Keynesian macroeconomic model. So it shows the market for economic goods interact with the loanable funds market or the money market. So if you are enrolled in the paid courses, we have explained about the curve and how they, what is the significance of this curve, everything in much detail. So you can go through it. It is going to be very beneficial. And if you're not yet enrolled in the courses, you may check out the courses that we are offering at Oliveboard. So there are so many courses for you for that are specifically designed for your JAIIB and CAIIB. So you'll get plenty of questions, case study based question, and everything will be explained in the class. So I hope that you will meet in the live classes in the doubt sessions that we are having. Okay, so apart from this, there was something else. There was a graph as well given. So that one, I think that's the, I believe that this graph was given something like this. So this graph was also given to you, and based on that you had to answer the questions. Okay, so it was the shift in demand change, equilibrium, price and quantity graph that was given to you. So in when there is a demand shift, so this was D, so when it shifts from D to D dash, so this is D dash. So and the supply is constant, this is S, so that is constant. So whenever there is a shift in demand, this is quantity and this is price. Okay, so this was the curve given to you as per the information that we have received from the aspirants. So based on that, some questions were there. Then there was a numerical that was there for recurring deposits, So the amount for every time they're depositing 1000 rupees, and the rate of interest that they are getting is 6%, and the maturity is 1 year. So for that you have to calculate the maturity amount. Okay, so this was the question that was given to you. So I hope that it was a simple one and you all have solved it correctly. So all right, so if you're facing any difficulty in solving any such questions, please write it in the comment section so that I can take all your doubts and we can solve these questions. So it's an easy one. You have to take the time period in the case of any monthly payments, any such things. If you are making any monthly payment, what we do, we take the periods monthly. Okay, so that means the number of periods for an year will be 12. Okay, so this is how we calculate it. And if you are facing any difficulty, you can just write it in the comment section. So I'll tell you about the detailed solution of this question. All right. Okay, now let's see what is the next one. So we have gone through this recurring in the case where we were discussing in the JIIB as well. So it is nothing new, it is just like that, and it is a plus point. Why is it so? Because here you don't have to read anything new, it is just like the ratio analysis that you had in the JIIB as well. So it's a plus point that we are having these things here. So now let's move to the next one. So the next question was there regarding the standard error of the mean for finite population. So this was from your module B of ABM. So this was the question. Now the next question was takeout financing. I have explained about it, so I think there was a repetition of this question in multiple shifts, that is why it is written. So this is also an important concept, you must go through it before appearing for the next time in CAIIB. Then there was a question about the job specification. So this is if you start reading the HRM module, this is one of the first things that you would read. So it is from the initial chapters of your it was, I think it's from the unit 2 of your module C. So it's an important concept, and a lot of questions are asked from this. So what is this job specification? So we have discussed on it that job specification is consisting of all these things that are there. So I'll write it down for you. So it basically consists of what all things? It consists of the statement about the qualifications. What else? So the characteristics of the employee. I'll just write CAR of employees. Then what else? So it is let's say if you are recruiting someone for a specific purpose, so are you having this required qualifications, or you may say the skills to perform these tasks, the specific tasks that are there. Okay, so like, and it will include the number of years experience that is required for that particular role. Okay, so this is what it is. All right, so a question about job specification was there, and job specification, whenever you read out the course material, it is one of the initial things and it is always a important one, so don't miss out. Okay, the job description, job specification, everything you should read it. Then if there is a rise in the repo rate by the monetary committee, what is going to happen? So the answer was see, in the case if there is a rise in the liquidity, or let's say the rise in the repo rate by the monetary policy, so whenever this repo rate rise, what happens? If let's say the repo rate is increased, that means the bank is going to increase the interest rate as well. Now when the interest rate is increased, so at that time what is going to happen? Lesser people will be taking the loans. If lesser people are taking the loans, in that case what is going to happen? The demand of the certain things will fall down. If the demand falls down, in that case what is going to happen? In that case, if the demand is falling down, in that case what is going to happen? It is going to lead to lower inflation. Okay, so what about liquidity? So it decreases the liquidity. So I think there is a typing mistake. So liquidity is going to decrease. Okay, so when think about it, what is happening here in the case of, let's say, if the interest rate rises, bank will be giving loans at a higher rate, so people will be taking lesser loans, and in that case the money that is in hand, you can say that whatever the amount that we are having, the liquidity that we are having, that is going to decrease. Okay, so that is about this one. Now, what else is there? So the next question was about the special mention account. So it is an important thing for us to know special mention accounts. What are these accounts? We have talked about the special mention accounts. They are the ones that we classify some things like the SMA 1 is there, SMA 2 is there, SMA 3 is there. What are these things? So the special mention account are the ones that are having the chances of getting converted to an NPA. Okay, so it is not a default, it is not a, you can say it is not a substandard account, but it is the one that you should keep an eye upon. Okay, so in NPA we have discussed in detail about this. So if there are symptoms of bad asset, that is what we call as the special mention account. Okay, so if let's say you are not making payments for after, I'll just write it down. So the categories are there like SMA 1. So what happens in the case of SMA 1? So let's say that I have taken a loan and I am not repaying it, and it's overdue, and it's been overdue for let's say 31 to 60 days. So that is what SMA 1, 31 to 60 days. Then 61 to 90 is what? It is the SMA 2. Okay, so SMA 2 accounts are there. After that they are going to turn into NPA. Okay, and what about this SMA 0? So if let's say you're not making the principal or the interest repayment in whenever it was due, starting from that day, I'll just write it down, SMA 0, starting from that day it has been due, let's say, for less than 31 days. Okay, so if it is less than 31 days, it is going to be SMA 0, that are showing the sign of some bad debt. Okay, so if it is less than 31 days, it is going to be SMA 0, then SMA 1, SMA 2. After that it is going to move towards the later stages. So this was the question. Then there was a numerical in M1, M2. So there was total 5-mark numerical on this. So it was a bunch of questions that were there, and you had to solve it based on the M1, M2 concept that we talk about. Okay. All right, now let's move to the next one. So the next one was about the coupon rate based question. Okay, so exact numerical is not here with us, but some rates were given. It was also a numerical type question. Then there were 2 case studies from module A, and after that there was a question on the job specification. So these were the questions. Okay, then there was a question that was relating the fiscal deficit. I hope that you all have answered it correctly. So this is an easy one. I believe we all are aware that whenever the government is spending more than it is earning, that is what we call as the fiscal deficit. So that's an easy one. Then question on regression was there. This is also a very much expected question. We are aware that the question on regression are always asked in the CAIIB exam. So it is a part of your this correlation and regression, this module B. Okay, so that question was there. After that, there was a question on simulation. Okay, and after that, what other questions were there? So the role, see, so this simulation also is a part of your module B. Okay, then role of job description in a HRM, very easy one. So this question was also there. Then there was a case study that that was regarding the mean and the standard deviation. So for you have to solve that numerical. The case was given to you. So that was it. Then the credit appraisal question was there. So the methods of the credit appraisal, these things were there. This is a part of your HRM module. Okay, so that means the module C. Then there was a question on the Keynes theory. After that, there was a question on the public money. So how much money the public will be having in hand. So it is what? The total currency in circulation minus the funds with bank. Okay, so the currency that is there with banks, that is what we call as the public money. When you subtract the difference between these things is what we call as the public money. Okay, then there was a numerical on YTM, there was a numerical on the present value and the future value, there was a numerical on the bond value, then there was a question on the strategic HR. So you can see so many questions from HR part here. Then there was a question on the current account deficit. It was a case study based question. Then, as I've already told you, there was a question on the halo effect. So what I've told you about it, so it is basically a tendency for positive impression of a person, company or any brand or product in one area to positively influence one's opinion or feeling in other areas as well. So if I'm having a very like, let's say out of 100 I'm giving 40% of the weightage to just sports. So if someone is very good at sports, can I decide that this person is good at all other factors as well? So that is the thing, that is what we say, what we call as the halo effect. Okay, it is very important every time a question is asked from this part. Then another very expected question that we were actually expecting, so that was the Johari. This question was there from the Johari window. So that is just a technique that is designed to help the people to better understand their relationship with themselves and others. So this is also a part of your syllabus, and it is actually most of the times this question is asked in the exam. So it is a part of your HRM module. So I hope that you all have answered it correctly. All right, now let's see what is the next one. So there was this 3-4 numericals were there from the correlation and regression. So these were from your module B. Then bond investment question was there. Demand supply curve case study was there. I've told you in the initial slides. Then there was a case study on the working capital. So that was there. Then recession, a question on recession was there. This is as we know from which module. So it is from the module A. Okay, when we talk about the business cycle. Then technical competencies, a question from this was there. Then leadership attributes question was there. All of these things from HRM. Then interpersonal skills, a question from this was also there. Job knowledge, and there was another question that was there from IRAC. So you just had to write the full form of this IRAC. Okay, so I hope that you all have answered it correctly. So we often talk about it even in case of your JAIIB as well. So it is an important full form to remember. Okay, so let's see what is the right answer. I'll write it down for you. Okay, so it is income recognition recognition. Just the simple full form was asked, nothing else. And asset classification. So when we study the NPA concepts, we talk about this a lot. So that is what the question was asked. What is the full form of this? Just a simple question on full form. Then there was a question based on M1, M2, M3, as I've already told you about. And then there was a question on the inventory turnover ratio. What was this question about? So see, I've told you about the inventory turnover ratio. What exactly it is? It is basically the rate you can say the inventory is sold, the rate at which you are able to you can say the rate at which you are refilling it, or it's getting, the whole cycle is getting completed for the inventory. So it is the rate at which the inventory stock is sold or even used, or if it is replaced, that also counts here. Okay, so whatever the cost of goods sold, how we calculate it? We calculate it by taking the cost of goods sold and we divide it by what? We divide it by the average inventory. Okay, so this is a simple one. We have talked a lot about the inventory turnover ratio. I'm really expecting you all have answered it correctly. Then there is this debtors velocity ratio. So we have already talked about this debtors velocity ratio in the initial slides. See, what it tells is the number of times the debtors are turned over during the year. Okay, so I have told you about it. This is exactly the one that we have discussed in the initial slide. Okay, all right, now let's see what is the next one. So the next one, so it is debtors turnover ratio, debtors velocity ratio, everything, it all means the same. Okay, now the next question was there, that was from EPS. Okay, so we do not know the exact question that was there, but we are aware that there was a question from this EPS concept. So it is from your module B. I hope that you all have answered it. If you remember the question, please write it down in the comment section. Okay, so all right, now the next question was there from the HRM case study was there basically. So there were 2 HRM case studies in total. Then the concept of narrow money. So this case study was there on narrow money. Okay, so that is what we are aware, that the narrow money is a category of money supply that includes all the physical monies like the coins, currencies, demand deposit, and every other liquid asset that is held by the central bank. So see, what we since it was a case study based question, it was a long case study, so we do not know what exactly was asked, but I hope that you all were able to answer it correctly. Now there was a question on SURFACI Act. It's very it's actually expected from you that you must answer it correctly, because in JAIIB as well we talk about the SURFACI Act. Then components of the NNP was also asked. Okay, so this was another topic that was there. So net national product, we all are aware. What is this? So see, this the components of this net national product, I'll just write it down for you. It is, see, how do you calculate it, what all are included here? So it is going to count the total value of finished goods, then what else? So whatever the services that are produced by countries, citizens overseas and domestically. So services overseas plus domestically. Okay, all right, so that is what the net national product is. So the important components that are there, see, it actually divides the GDP into four broad categories of spending. What kind of categories? So one is consumption, then there is investment, then there are government purchases and the net exports. So these are the things. So depending on what were the options, you had to choose. Okay, so if you remember the option, please write it in the comment section. All right. Then there was a question on letter of credit as well. So this letter of credit has been with you since JIIB. So I expect that you all are aware of the concepts of letter of credit. If you are having any difficulty, please write it in the comment section. I'll post the link for that video where you can get your concepts cleared. All right. So I believe we have covered pretty much everything that was asked in the CAIIB exam today. So we here at Oliveboard, we are coming up with a lot of courses, lot of offerings for you. So we are having this cracker course that is there for CAIIB, which you can take, and you will get the video lectures for the two compulsory papers. Apart from that, you're going to get the regular live classes. I think it is weekly live classes that are also there, and apart from that, you're going to get the case study batches as well. The numerical batches also are going to get started. So you may check about these batches in the by visiting our website, or if you are having any difficulty in finding out the right course for you, please write it in the comment section so that I can advise you whichever course is most suitable for you. So there are certain people who are not clear with the theoretical things, who are facing difficulty in the theoretical things. For that, we are having a separate course. If you are one of those people who are finding it difficult to solve the numericals, so we have specific courses for the numericals as well. So you can just get yourself enrolled, and in that you're going to get all the relevant numericals based on the previous year pattern. You're going to get all the numericals. I'll be solving those numericals stepwise, and we are going to so it is going to be a live interactive session where you can get to interact with me directly, and whatever doubts you are having, whatever queries you are having, you can post it, and it will get resolved immediately. So I hope that you all will be enrolling in those courses, and if not, you just subscribe to this channel, and we are going to come up with the regular YouTube videos of the important questions that are asked, anything that is important for your exam. So we are going to come up with those things as well in the YouTube video. So don't forget to subscribe to this channel, and don't forget to like this video if you have liked this analysis of CAIIB exam. So I'll be ending this video now. Thank you so much for watching. Write it in the comment section how much have you scored in the exam, and if you were not able to do it well, so you can just tell me what difficulties you were facing, and we can give you the proper plan for that you can follow for the May-June session. All right, so this is it from my side. Thank you so much for watching. We'll meet in the next video. Thank you.